stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks. I'm Tracey Ryniec, and I'm joined at the chairs this week by Kevin Cook. And we have a healthcare innovator along with an old school transportation company. Kind of an interesting mix. Let's find out more about them. So Kevin, I brought the old school company this time.
I thought you were going to do a tech stock.
I know, well, a lot of times I do, but not this time, no. I'm going with the old. Some of these go back 100 plus years. It's a railroad.
Okay.
So CSX, which is just ticker CSX, they're on the East Coast. They do mainly East Coast lines all the way down to Florida. Things are good when the economy is good. You have to transport things. You're transporting cars, chemicals, home goods, consumer goods. All of this gets transported.
Yeah, they don't have any lines by us here in the Midwest, right?
No.
It's all Union Pacific and BNSF, right?
Yeah, and Kansas City Southern maybe, but we're on the outskirts of them maybe. So yeah, like it's East Coast. I'm sure people over there know them pretty well. And they had another blowout quarter, really. And a lot of people have been talking about the railroads because those shares have been hitting new highs and people can't believe it. So I brought a couple charts to show kind of what's going on with CSX, which is hitting new highs. As you can see, I brought the price and consensus. This is what's happening with the earnings as well. So not surprising, we got this great double-digit earnings growth expected now from a railroad, no less.
And that's why I thought it was a tech stock. I was looking over your shoulder and like, this earnings growth doesn't look like an old-style company to you, right?
You would think maybe this is some kind of technology, but no. It's just one of the old transports in the railroads. But things are looking real good here. It's a Zacks number 2 right now after this earnings because all the estimates are being raised here because it was better than expected and the outlook was better. So yeah, suddenly we are seeing kind of what the economy is doing here. It's still going strong, and when you have transports doing this, that's a big reflection of what's really going on out there. And then I brought this other chart just for fun and to stick it a little bit to Microsoft shareholders, but I used to be one, so I'm in that camp to some extent. But you can see I'm comparing it back 20 years with Microsoft here. Microsoft was really booming. That was at the height. 1999 was when those shares soared.
So CSX is up 15 times since the year 2000.
1,500%.
Who would have thought?
I know, you would not. And then even just the last couple of years, real good success with CSX. Same thing with Microsoft. It's been real solid.
I mean, it's
the
almost
last
like
couple years.
this cycle is stronger for transports than previous cycles.
Yeah.
Is that the Amazon effect or?
I don't know. Just the
shopping
consumer.
online?
Yeah, maybe. But you can see a lot of people are getting a little bit nervous, though, when they see charts like this because they're like, how long can the railroad really keep it together like this? But we've really seen this breakout here in 2019. So we'll see if it holds here, but it's going to be an interesting one. I do like all of the rail names right now.
Yeah, and it's indicative of this economy still booming, right?
Yes.
It's going to be the longest expansion ever, right? And how can you call a top when this is going on?
Right. And some people might be asking about valuation on some of the rails. They haven't been cheap the last couple of years. Earnings have been rising, so it's kept it kind of affordable. CSX is trading around 18 times. It's not awful, but it's not. They're no longer values, and you do get a dividend, but CSX is only at about 1.2.
And that first chart you said you showed,
double-digit
shows it all, right?
Yeah,
the growth,
yeah. So that's the old school economy one. But you brought the healthcare innovator. This one sounds really interesting. I'm not going to say the name because I never can. But the ticker is BEAT, right? B-E-A-T.
Well, what's funny is you actually flagged it a couple of years ago in one of your earnings charts because it was starting to show all these beats. And that is, its ticker is BEAT. Because it's involved with monitoring your heart. Yeah. Okay? And instead of burying the lead, I'm going to come right out with the great news that everybody should know if you don't know anything about biotelemetry, and that's that they are a partner with Apple in what could become the largest ever heart study.
Okay.
Wow. So BEAT specializes in devices that can, they sometimes abbreviate them MCT for mobile cardiac telemetry, thus its name.
Yes.
So I underlined a couple of points on this slide. This was from an investor presentation in March from BEAT, and the top red line, obviously this validates biotelemetry's position as the cardiac M-Health leader, or why would Apple choose them, right?
Right.
And then I and then down at the bottom, I underlined in red, Apple Watch is a screening tool, not a diagnostic medical device.
Yeah.
And this has been said by a CEO of Apple that they're not on a path to have the watch become a medical device.
Okay.
Okay. It can be used for screening, obviously.
Right,
It can collect data.
Yeah.
But it's not going to go through the FDA gauntlet at this time.
Yeah.
So that I think that's good for Beat.
Right.
Beat gets to keep its space.
Right.
And they would probably know as soon as anyone if that was going to change. All right. Some of Beat's growth snapshots here. This is so 2018 was obviously record results. Take a look at the center column. Revenue hitting almost $400 million in the past 5 years. That's 24% compound annual growth. They'll grow the top line 10% this year to $440 million based on estimates. All right, but the stock just had a big drop. It's trading 55 today as we speak.
Okay.
Come down from all-time highs of 78 after earnings. They made an acquisition, and earnings could be 5% growth to flattish this year.
Okay.
So, but estimates did go back up because expectations were worse. So that's why it's a rank 1.
Okay.
But there's a bigger problem here, and that's that there's a competitor called iRhythm, IRTC.
Okay.
And they're flagged by a couple of the short sellers. I don't know if it's Citron or Muddy Waters or Spruce, but a couple of those are saying, sell iRhythm because they're going to have reimbursement issues. And as you know, with drugs or devices, it's always about, are the insurance payers going to pay?
Right.
And if they're not, then you don't have a viable business.
Harder, yeah.
But biotelemetry, for the specific, they call them Holters for some reason. I don't know if that's an old hospital term or name for these different devices that can monitor your heart. This is a very small area for biotelemetry. They specialize, I said, in MCT and MCOT, which is mobile cardiac outpatient telemetry. Okay. So a doctor can say, hey, I want to have you monitored for 3 weeks or 3 months and collect all that data. And by the way, that top note about an acquisition, the portal that they bought, Beat bought Geneva, which is a portal for data analytics. So that way, all the data can be useful to the hospitals and medical firms. Okay, let's talk about valuation. SunTrust put out a note after this. Both iRhythm and Beat had dropped quite a bit, over 25%. SunTrust said, this is not an issue for Beat. And our case is we have an $80 price target based on over 6 times sales. And I show the median and mean for sales. Right now, Beat is trading below the median. It's trading 4 times after this wipeout.
Wow.
Because, last week we just had sort of a mini wipeout in healthcare.
Yes.
They went at, I call it the single payer panic.
Right.
And Medicare for all is coming. So they sold
everything.
They sold all the insurers. They sold the hospitals.
I know.
They hit biotech. They hit devices. I mean, my portfolio was doing one of these.
Right.
But I actually bought a lot of things that were on sale.
Okay.
And we were like a week early in Beat. I told my people to buy it around 60. It's trading 55 now.
Okay.
It's trading only 4 times sales. And I think it's a bargain, especially with this niche and this growth.
Yeah. Okay. So these are a couple of good companies here. Railroads aren't pulling back, but that's a good sign.
Yeah.
I do think maybe some of the healthcare stocks needed to pull back a little bit,
we had
a little
a strong
pricey.
Q1 run.
Yeah. So we'll see. Okay, so those are our top stock picks this week. And be sure to watch again next week as we bring you even more great stock picks to hear during earnings season. A lot's going on, so be sure to tune in.